welcome to another episode of Emerging Titans on ET Now. I'm Anisha Jain. Joining me today is a dynamic father-son duo who's not only set out to make it big in life, but they're making sure they're charting their own paths, whether it was branching out of the Bombay oil industries for Mr. Harsh Mariwala and setting up Marico, or whether it is about setting up sharp ventures. The duo has never been averse to challenges and make sure that they keep reinventing themselves to be future ready. Thank you, gentlemen, for making time and speaking with us today.
Thank you.
Thank you.
You know what? Let me begin by asking you, since I talked about reinventing, Mr. Mariwala, how are you reinventing yourself these days? Does the word retirement hold any meaning for you?
Zero meaning. I don't think I know the art of doing nothing. I have to be occupied all the time, mentally, and I think it's good because you learn new things when you do new things, and you keep yourself busy. You use your mind, brain, whatever you may call it, so you don't go senile. So it's very important for every individual to be occupied.
Yeah, I think he's restless. He wants to do things. He wants to do them now. He wants to do them fast. He's got I think he's got the experience now to be able to manage multiple things, and I think he's a past master at getting things done and influencing getting things done. And it's very different stage and age for me. So I'm on a different journey from him.
But is it difficult working with him given his high expectations?
Well, I think I'm trying to build my own shoes and get into my own shoes. I don't want to fit into his shoes.
Fair.
So I'm sort of charting out my own path. But I think what he's able to give me is just a sense of what does a picture of success look like. So I think I'm lucky and blessed to have him because the focus, the depth, along with the interpersonal skills, along with just controlling yourself in terms of managing it could be the smallest things, to managing your calendar, to managing your teams, to delegating, to the whole part of taking ethics to another level in terms of just the whole interpersonal aspect of it. Is just it's a high bar.
High bar indeed. But were you, sir, a bit disappointed when he decided not to play that active a role in Marico?
I can't call it disappointed, but maybe if you can use a milder word, maybe something else which he would do, and I think he had it in him to start doing newer things. And in a way, I think if you look back, it has worked out beautifully well because if he had joined Marico, it would have always been perceived as my company he has joined.
Yeah.
As against a business he has started and pioneered on his own. So he can say that I have created a legacy on my own and not through Marico. And I think that's given him a completely different way of doing things. And mind you, he has done it on his own. I have not really. I may have guided him a little bit, meet some people, but ultimately all the decisions in terms of investment decisions, in terms of people decisions are his. So it's very much his own journey. And I play a complementary role rather than very deeply guiding role, kind of a role. So I think he can, and I can proudly say that he has done a wonderful job in building a business on his own, and which he would never have been. Even if he did something to Marico, it would have always been perceived that it is something I had created and he joined.
Yeah, that's fair. To chart out your own path is also something which is very exciting in that sense. But what was your thought process behind not joining Marico? Was it the fact that he said that it would have always looked like that it's his business, his legacy, or was it boring enough for you?
No, actually, it's very different. So growing up, of course, I really respected what he was doing, and I respected him, respected the businesses that he was building, and I was, come from a joint family. So, I think, always looked up to him. And and I did work there, right? I did work in Kaya, which was part of Marico back then when I joined. And I just think that I was in a bit of a silo where I was not being able to get the level of I mean, of course, when you start small and you start very low in the hierarchy of things, which is
Of
totally
course.
fine. Um, but I was at some point I was just feeling suffocated because the organization is so professional that I just don't think there was any room for a family member other than, of course, the founder. So and again, coming from that family, I think entrepreneurship is something that's there, right? So we have always wanted autonomy and always wanted to take risk. I couldn't do either, right? Because it's a professional
Fair.
organization. So when you're there, you feel a bit. I was feeling a bit suffocated, and so the only route I had was entrepreneurship. So that's when I sort of stepped down and said, look, let me do something else. At that time, of course, it was difficult to do, but I think looking back, it's been a good journey.
So let me kind of zoom a bit and talk about the consumption story in India because that's something which you guys both look at, but in different facets of
Yeah,
sorts.
yeah.
So let me first start with you because last few weeks, quarters has given us a bit of an indication of a slowdown when it comes to consumption. Um, but at the same time, the overall spend of people is not, decreasing. So that brings me to the question: is the nature of consumption changing in the sense that perhaps we have reached 100% in terms of the penetration of staple FMCG, and it's time now for companies to reinvent and kind of move towards the higher end of the value chain? Your take on that?
I think no, the consumption has actually stagnated. That's for sure.
Okay.
It's not increased. It may have increased at a very high. So there's a K-shaped
Affluent
kind
end.
of a impact of the economy on the rich and the poor. The rich have become far more richer, and the poorer have got impacted, and partly because of unemployment, partly because of inflation. So actually the consumption figures show that it is stagnated, the consumption. And a lot of it has to do with macros in terms of the economy not providing enough income, growth in income, which again impacts consumption. But clearly there is an opportunity to improve that. And I think a lot will depend on how the economy does in future in terms of employment, in terms of inflation, in terms of agriculture productivity, and if all that works out well, we should start seeing a positive cycle also.
Yeah, and that innovation is quite rampant, Rishabh, in the industry in the sense of what's happening to, let's say, the higher end of consumption or even distribution channels with respect to quick commerce, etc. Tell me the top two or three trends that have got you excited within consumption because you've been looking at it with a very, very close lens for a while now. What are those two or three things that stand out to you which make you feel that this is going to be the, let's say, next way of how people consume over the next decade?
Yeah, I think no, definitely. I mean, I was going to say the same thing. I think the rich are getting richer, and overall, in terms of even the risk profile is changing. So because there's more risk in the system, there's a appetite to go into say stocks, right, versus say something where you'll get a lesser return, right, but it's a riskier one. So that sort of emphasizes or reinforces the point that he was making about the rich getting richer, right? And then I think with that you see two or three things, right? You see premiumization going up, and you see luxury going up. So I think those trends are here to stay. If you see the quarterly results of some of the hotel industry or airline industries, they're at all-time highs. So I think you're seeing that actually play out. And if I were to segment it further in terms of what are the few themes, I think coupled with, I mean, this is something that very much we do at Sharp, which is this whole like D2C thing, where again it's the demographics. So you do have that 18 to 45, right, who are actually consumers of these new age brands, and there's premiumization and luxury happening. There's masstige, premium, prestige, luxury. So I think at different stages you're getting consumption happening across different categories. I mean, of course it's beauty, personal care products. Of course it's things to do like with devices like wearables, or with food and beverage and QSR. I mean, you're seeing that happen all over the country. Number of coffee shops mushrooming, for example, or even in health tech, like our awareness of, I mean, post-COVID or whatever, we're just way more aware. So it's more prevention rather than just rather than a problem solution when there's
Correct.
something happened, right? And that's why diagnostic chains also are doing phenomenally
Extremely well.
well, during and post COVID.
You picked up on that BPC point, so I just wanted to hash it out further. You're across the board, I mean, right from Honasa, Nykaa to Purple recently. What's making you that confident about this space? And also, just to bring in the angle, just for the help of our viewers, when a stock like Honasa does crash the way it does, 40% lower, what goes through the mind of an investor like yourself?
Yeah, so definitely, I think Honasa was the sort of torchbearer, right, for D2C brands in the country. So for sure, I think the ecosystem does get a jolt.
Yeah.
There's no denying that, including investors. But I think, look, after I'm on the board of Marico, and it's a once you do listing, I think these things sort of over time they become lessons. And I think this whole overstocking bit, right, that's happened, and it's all
In
in
the
the news,
public
it's all
domain, yeah.
public. I think can those be avoided? Of course. But is there anyone who's gone to that scale? And these are, let's be real, these brands are like less than 10 years old, right? It's not like these brands are 15, 20 years old. So I think these are lessons learned, and I think the entrepreneurs are resilient enough. The fact that they've actually gone IPO in a market like this and succeeded, I think they'll bounce back.
So you're not throwing in the towel yet. You're still committed to your investments there.
For sure, for sure. We are all in. We are all in. We are not. We don't believe that we've not in terms of our positions as well. We've not gone down on them. I think there's no reason not to do like beauty personal care, for example, because at first we were thinking, because a lot of our investments are in beauty personal care, and thinking,
Exactly.
are we doing too much of that? Is there too much concentration there?
Overexposure, yeah.
Yeah, but the reality is that no, you're actually seeing brands becoming 400-500 crores even today, right? And they're still growing, and you can question the unit economics and all that, but they're breaking even, and that journey is still continuing.
Sir, since you were talking about innovation and how you have to really look at that, and we've all read those 4 Ps of marketing, right? Product, placement, promotion, pricing. And they go through their own cycles. Which one do you think is the most important right now? Is it placement in terms of the distribution, the way quick commerce is disrupting, or do you think that's only a way of meeting demand and not really something that, companies like yourself in terms of Marico should focus on?
No, I think distribution, as you rightly put it, is going through a transformation, especially in big cities and even in mini metros also, because of the emergence of quick commerce, which is a big discontinuity. So organizations have to realize that, okay, they have to encash on this opportunity or how to mitigate the threat arising from that. And the threat comes in to your normal distribution channel, which is undergoing a huge impact. So you may have to redo your distribution strategies. Many of the retailers may shut shops, but that's reality, because what Q-commerce is offering is really unique in terms of not only just delivery in minutes, but discounted prices, anytime delivery during the day and night. Also returns. All that is not offered by the grocer, so they have a unique advantage compared to grocer. So I think one will have to look at that if you're an FMCG. But the most important thing for any brand is the product itself.
Yeah, because you have parachute oil on one hand and you have that onion oil on the other hand at Mamaearth, and you're always confused which one to go for, the quality which has done well for you throughout your life so far, or try something new. I think that conflict of interest might be something which is interesting. But just talking a bit more about Marico, in the sense, what are the next set of targets, let's say, that you have given to the leadership team there? What is your ask in terms of how the international geography should grow in? Which is the vertical that you are most confident about?
So I think every organization pivots. If I look at the journey of Marico from the time we started to today, we have pivoted many, many times, and we are also currently at a stage of what you call a transformation pivoting. So our new pivots are the foods. So we entered into foods a few days back, and that has to get accelerated. We have launched whole range of masala oats and now muesli and millets, and we also prototyping some snacks also. So I think that's one, foods. Second is premiumization, because we are seeing that in the personal products there is a tendency to go in for premium products. So that is second. Number three, the D2C brands. We have acquired 4 D2C brands, and we have managed them or continuing to manage them in a different profit center, in a different team. So we need to succeed in that D2C. Uh, and then the international business also, we see an opportunity to expand international business to many other newer markets, as well as make acquisitions in existing markets and also launch newer products. And finally, the core, which is the old products, which is still very, very critical. So we have to maintain, if not, or grow, maybe not at the same rate, but still grow the core. So I would say these five, and then on top of that, the sales transformation exercise, which is very, very important, because of this emergence of e-commerce, modern trade, and QCom now. I think overall distribution scenario has changed quite a lot, and I think most organizations are re-looking at how can you make distribution far more effective in the context of all the changes which have happened.
What are you looking at differentiating yourself with, which will be a compelling buy for a consumer?
So our food brand today is Saffola.
Yes.
So Saffola stands for healthy foods or healthy whatever eating, and within that the healthy foods come in. So we will only position our foods on the health platform and not just. So even our snacks are there which are on health platform. It's the ragi based snacks. So our initial success with the oats and masala oats has given us a market leadership in that segment. So we have tasted success in foods also, and now we have to scale it up in some other category of foods, which I mentioned. So I personally am quite, I would say, optimistic about our food journey, and on the back of our success in Saffola oats, and it's not a Me Too product. So we will not go into a Me Too product in foods. It will have to be a differentiated product.
Which end you're most excited about is because public equities has done really well, but then you can't compare with the unlisted market where you get like, multiple X kind of returns.
Yeah, I mean, you're right about that, but I think the public equities market also is more, the risk return ratio is much better in terms of for every unit of the risk is lower, and you still get really good returns, as you mentioned, but some of this stuff is time bound as well. So today the markets are up, but we don't know. Small cap, mid cap, large caps are all up. We don't know what's going to happen a few years down the line. So I think it's more a function of asset allocation and how much of your money we want to keep in public markets versus venture capital. But to your point, I agree with you that venture capital, and we've proven it with our portfolio, that the IRR that we've gotten from there has been significantly more.
What has that been, if you're making that number public for us?
Yeah, so it's been around between 45 and 50% IRR
Wow.
that we've achieved in the VC space across all our investments, and of course the public markets have been half of that, right? If you
Still
just go by
great.
the Nifty or whatever index you take. So I think we want to play, but again, we also and we do believe that we're risky investors because most of our assets are in the public markets, and a smaller part is in venture capital. And I think that's a good balance to have, given that every investor is different and everyone's risk profile is different based on their capital requirements and where the capital is coming from. So I think from where we sit, I think we believe that we've got a high risk strategy that's playing out.
There is this trend of cash burns to begin with. What's your view on that as well?
So I am not in favor of cash burn. I mean, up to a certain point, it's fine. To build a business, to get a critical mass, you need to sacrifice. But it cannot be for very, very long periods of time, and the trend has to go on improving. If my burn is 100 today,
It should come down at least.
come down in terms of a trend. It cannot go on going up with the increase in turnover, and that's what sometimes it upsets me. But even in our D2C business, we have taken step to be far more EBITDA
Conscious.
sensitive, conscious compared to many D2C brands.
Since we are talking about portfolios, help me understand which are the recent ones that you've dabbled your hand into. What are the recent additions you've made to the portfolio? Or how is it stacking up right now?
Yeah, so we're focused on consumer.
Yeah.
I think we'll continue sticking to consumer. I think we believe in like Marico. I think we want to be focused and we want to be consistent. So these are two things that we'll continue with, and we will do seed stage, pre-series A, series A, up to late stage. But anything to do with consumer, because that's our
Area of expertise.
expertise. That's what we understand, and that's all in our backyard, right? So I think a couple of deals we've done. We've done like a healthy sauce brand, which is for kids, and with consumption of dips and sauces and such going up, and with the whole trend of healthy, it's not. I mean, there's better for you and there's healthy. So in both better for you and the healthy spaces where we want to play in. So we've done a very early stage sauce brand that's there. We've also done something to do with gut health. So there's a wonderful
Better
company called
Bug.
Good Bug that's
Good
there,
Bug,
and I was a consumer of that product. One of our favorite VC funds is a large investor in that business, and we really like the entrepreneur. So and the sauce brand is called Truvi, and it's a health sauce brand, and again with entrepreneurs who love consumers. So if they're passionate about the consumption space and they're truly building for the new India, I think that's what excites us.
What is that one thing you find difficult working with him, if anything at all? And don't say nothing. There is always problems working with parents. I go back home and within a week I have like some massive fights with my mom and dad.
So now I'm not as sharp. He oversees what I do. He understands what I do, but I'm lucky that the final decision making lies with me. So he's empowered me to that extent. However, I think he's restless. So he needs to know, which is great.
Yeah.
But I think what next? What next? And that's a good thing in some ways because it pushes you as well. And I think the other thing is that he has this habit of checking his phone all the time. We all do, but I know that he's listening while he's checking it, but others don't. So I think sometimes these small things can get to people who don't know him. It'll be like he's not focusing on what I'm saying, but he actually is.
Yeah,
So,
but I think that brings us to that 360-degree conversation. We started with him being restless in the sense and not understanding the meaning of retirement, and we are back to that. Thank you, gentlemen, for
Thank
making
you.
time and
Thank you,
speaking with
Anisha.
us.
Thank
Really
you.
appreciate your candid chat.
Thank you so much.
Thank you.
Thank you. With that, it's a wrap. Stay tuned to ET Now for more.